Hello, ladies and gentlemen, and welcome to 5-Minute Bitcoin, where we onboard the masses 5 minutes at a time so you don't have to. Okay, today's episode, we're going to talk about some pretty heavy stuff. We're going to talk about the Fractional Reserve Banking System and how it relates to what's going on in the world right now. And trust me, I am going to oversimplify it because 5 minutes. There's no way to really explain the whole thing in detail. But I hope that my message resonates on some level and sparks an interest in it for you, and so that you go and do your own deep dive and go down the rabbit hole with learning about the economic engine that drives our societies. All right, fractional reserve banking. Okay, the way it works currently in the United States and other countries around the world, the monetary model is this thing called fractional reserve banking, where the banks loan money. Okay, now when you, for example, go to a bank and you deposit $100, well, the bank loans that $100 out, and that $100 that you have deposited could be loaned out to different people and entities at a interest rate. And this is how the banks make money. And the banks make money to pay their shareholders, their board, their staff, their expenses, and so on. At your expense. For example, if you're the person that's putting that $100 in the bank. Now, the banks used to be bound by this thing called a minimum. They used to have to hold some of that $100, and now they don't. Okay, so this loaning process, this lending process that the banks do, acts as a money multiplier. Okay, it's basically an economic engine that expands the monetary framework of the economy. And I'm oversimplifying it, but in a nutshell, that's what it is. All right, so you loan, you deposit your $100, they loan it out. Okay, and this blows the money out to other people, and this creates an income for the banks. And if you're a bank shareholder, or you work at a bank, or you're a bank CEO, or you're on the board of directors of a bank, well, then you're in the money, pardon the pun. All right, now, if you go to a chat bot right now and you ask the chat bot to describe the fractional reserve banking system in one word, the chatbot, or the AI, is more than likely going to use the word loan. L-O-A-N, loan. That is incorrect. So that shows the bias of these so-called open AI chatbots. There's a bias there, and stay with me here. And the reason why there's a bias is this. The best word to describe the fractional reserve banking system, as far as they're concerned, is loan. And if you ask any banker, they'll probably agree with that. However, I'm going to oversimplify here, and I'm going to tell you that the lending process that's part of the mechanism of the fractional reserve banking system is only part of the machine, the money multiplying machine that grows the economy, that expands the monetary framework. But the fuel that drives the fractional reserve banking system is best described by one word, and as far as I'm concerned, that one word would be debt. Your debt. the country's debt, corporate debt. And so now, if you take a look at the gross national debt, you can go on the U.S. Treasury website. Right now, they've got this thing called a debt clock. And right now, it is over the gross debt of our country, of the United States, is over $33 trillion. Now, what does that mean? Well, it means this. It means simple math. Through taxation and this money multiplier expansion, through lending and pulling in money through debt, it is mathematically impossible now to pay off that $33 trillion. It's growing at a rate now where we do not have the income to pay it. It's that simple. It's like if you have a job and you make $50,000 a year and you have a mortgage that's $70,000 a year and a car that's $10,000 a year or $20,000 a year, and you're sending your kids to private school that's $15,000 a year. You see where I'm going with this? Well, through the actions of an irresponsible government in cahoots or with partnership with the central planning of the United States, the debt is out of control, and something's going to break. Now, where am I going with this? Well, I'm trying to educate people on how that mechanism works. You have a system that's predicated on debt. Through irresponsible management of this system, or even corruption, it's basically broken. And now they're trying to band-aid it, and they have two options. The federal powers, the central planners at the Fed, what we call the Federal Reserve, they have a hard job. I would not want Jerome Powell's job, but here's what they have. They have a choice. Now, a lot of people are going to disagree with me, but they have a choice. They have the choice of raising interest rates and destroying the economy. Temporarily. Possibly temporarily. It depends on how well they manage it. Or the other thing they can do is turn on the money printers and destroy the currency. Okay. Once you destroy the currency, there's no coming back. So they have opted to destroy the economy because there is a possibility that you can band-aid it and take it off of life support by some miracle at this point and resurrect it and save it. There is a slight chance, but every day that passes, that job gets harder and harder, and I would not want that job. Now, where does this bring us? Well, it brings us to this, and I'm way over on my 5 minutes, but I'm going to continue, and I hope you stay with me. There is a mechanism that could save the system. However, the mechanism is staring people right in the face. The problem is this. The people at the top of the system, the current system, what we call the legacy system, they are not likely to let go of that power and wealth because most of them are older and most of them are going to die soon, and they don't care. They're rich, and when you're rich, why would you want to change? There's no incentive to change the system. But eventually they're going to die out. Now, hopefully this thing won't, hopefully they can keep it on life support until they do die. I don't know. But there is a mechanism that could save us all a bunch of headaches. And again, if you refer to the last video, we have a system of trust and we have a system of verification. It takes the trust out of the equation. You don't have to trust the government. You don't have to trust the corporatocracy, the kleptocrats. You don't have to trust anybody. The banks, the banksters, you don't have to trust them. So there is a mechanism that could save us all a bunch of this, a lot of this anxiety, and it's right here. But it's going to be an uphill grind, guys, and I hope that you will stick with it. Bitcoin is freedom. And once you go down the rabbit hole, by the way, if you have someone that is in need of bringing down the rabbit hole, please bring them to the channel. I'll do my best. So we're going to need a lot of people to adopt Bitcoin. How do we do that? Well, education. Education is key to this. Get off zero and encourage other people to get off zero and educate themselves on how the financial world works. Financial literacy, and which includes the history of how money works and throughout time and human history, is something that a lot of people find boring or uninteresting because it's very complicated and in many cases involves some daunting concepts to understand. And so a lot of people don't have an interest in it, especially people that, well, quite frankly, a lot of people don't have any savings and they're just day-to-day living. And so there is no, there's no push to get them into this Bitcoin to bring them down the rabbit hole. And it's unfortunate. However, some of us we've worked and we've saved and we've grown businesses and we have some wealth. And we want to keep that wealth and we want to preserve that wealth. And we see this mechanism that's working for us for 15 years now is outperforming everything else. And when you really do your homework with Bitcoin, you will see that it will succeed. It doesn't need these ETFs and it doesn't need government approval, but the governments will fight it, and eventually they're going to come on board because they'll see that it doesn't need them. It doesn't need the banksters and these legacy dinosaurs like Charlie Munger and Warren Buffett. They'll be dead soon. And a lot of those people, those dinosaurs, they don't really care about the legacy that they leave, apparently, because they would do their homework and they would tell you, if you're young and you are not dollar cost averaging, hodling, and self-custodying your Bitcoin, then you're probably going to be on the wrong side of history. Anyway, guys, I'm way over. This is my longest episode because it was worth it. Fractional Reserve Banking System. Go do a deep dive and learn about it. Also, learn about the history of money. You'll be shocked. Learn about the Bilderbergs. Learn about Richard Nixon's gold standard decision. He wasn't alone. He's just the tool that facilitated it. But learn about all of these things while you're going down this rabbit hole. And then also subscribe to the channel. Hit the thumbs up button. Subscribe. Tick that little bell for updates. And if you've gotten anything from this video, feel free to zap some sats. My name is Frederick Mann. This is 5 Minute Bitcoin. And I'm going to remind you again to dollar cost average, hodl, and self-custody your Bitcoin. God bless you.